Okay. Thanks everybody for joining us today. We wanted to connect with John, who is our go-to at Moo, and just thought it might be helpful to one, talk about how these ancillary benefits are they can help with employee retention and just help the employers help the employees too. So John, I know everyone can see the notes, but we'll start here on the first slide. If you want to just
Sure.
introduce yourself, and then we'll take it from there.
Awesome. All right. Appreciate that. Thank you. So Josh and Joe and everybody else on here, I know everybody else knows me a little more, but it's a pleasure to meet you, gentlemen. So my name's John Prendergast. I'm at Mutual of Omaha. I've been here, it's 10 or 11 years. I don't know if I'm starting or finishing, but I've been here a little while. So I've worked with CAFL I've been here 10 or 11 years at this company. I was up here with another company for a couple of years, and CAFL's always been a good partner of ours. So um, it's a pleasure to meet you guys. What I'd like to do whenever I present to anybody, whether it's a client, whether it's employees or people like everybody on this call, I like to keep the conversation very open. If I'm not answering questions and I don't know about you guys and what you're doing, it's just not as valuable what I've learned. So before we jump into anything, Joe and Josh, would you guys mind letting me know, are you new to the group area? Do you do a lot of group business? Is it mostly personal stuff that you do? Just so I can get a little background as to what your forte is, if you don't mind.
Sure, I don't mind. Yeah, I've been doing groups for several years now, but it's always been kind of an ancillary part of my business. It's been more focused on the personal side of wealth management. But I
Yeah,
think, I owe it to the clients that I do have group business with and, future business, to make sure it's not just, health insurance and 401ks, that I can expand that offering out a little bit.
wonderful. Thank you.
And John, I'm new to CAFL. I'm a new brokerage manager, but I'm new to the group space, so this is all helpful. Thank you.
Okay, excellent, excellent. So, all right, so why don't we jump in a little bit? I'll just kind of go through, Joe, especially, and Josh, if you guys can share kind of your experiences and, Nick, Jennifer, anybody on here. I know there's more. I'd have to flip around on my screens here. So, all right, so why don't we go to that next slide there? The agenda, which I kind of don't care about. Let's skip to slide 3. It just tells you what I'm going to tell you. So, all right, so basically the way I look at it, if you're working in mostly, you've had several years in the group business, but mostly the personal side, a couple of things where it seems like you understand is, so having these group benefits, obviously you get everything on a group platform. On the personal side, you're getting lasered in on. You're having everybody say, okay, how old are you? What's your gender? What's your family history? Everything else. So over here, a couple things come to mind. One, if you're working with your clients, and if you're on the personal side, chances are you have a lot of influencers and people in decision-making capacity. So recruitment of employees, if you have these benefits, a lot of employers have them. And if they don't, then they're going to be on the short end of maybe trying to hire some people. The next kind of along with that is retention of employees. Now, if I'm sitting here and someone else is offering me all these benefits and then the same salary, yes, there's a cost to the company, but I'm making my 50,000 whether I'm here or there. Plus, I get life insurance. Plus, I get this. Plus, I get all of this other stuff. So the retention of employees, and because we're writing these on a group chassis, it also helps obviously that if I'm not the healthiest individual, now all of a sudden I'm getting these benefits, whether they're voluntary or employer paid, on a group basis where the risk is being spread out, not only on the 10, 20, 100 people at the group, but on the hundreds of thousands of people that Mutual of Omaha or one of the other carriers in the market are insuring. So the other nice part is the guaranteed issue of benefits. So, I've worked with people, had people come up to me during group meetings where they say, hey, I've got brain cancer, or I've got this, or I've got that. So having the fact that guaranteed issue is there, both for the employer side, And then on the, for instance, voluntary life, we normally will do a guaranteed issue of 50,000, 100,000, depending on the size of the groups. Now you've got an employer, 50K, we'll say, or one-time salary plus another 50, 100, 150 that these employees are absolutely guaranteed to get. So again, it's pretty nice for that. The other part, as much as we all care about employers and employees, I want to put food on the table. I've got, twins that are 16, and we tried to add up what our food bill is these days, and my family didn't believe me down at the beach. My daughter's 14 as well. So I need to put food on the table. So a consistent stream of commissions. I know occasionally on the personal side, they might be lumped, maybe in the beginning, maybe you've just kind of got, renewals, residuals coming in. The commissions you're going to be receiving on the group side of it is, if it's a flat 10, flat 15, whatever commissions are, you're going to have that, you're going to be able to build out your projections a little bit better, maybe because you're now knowing exactly what's coming in and coming out. And then the other piece, which I think is really valuable, being on the personal side of things, you're working with these decision makers. You're working with people that own companies. You're working with people who have enough money to now have a financial advisor. So if you have the relationship already with the decision makers, why not expand out and get not only that extra stream of revenue, but solidify the relationship and protect it against somebody else? So we all know how competitive it is from the broker side, everybody going after everybody's business. So now if you can then go and expand in some areas, be seen as more of a leader and more as a helpful advisor to them, then that can help them keep all of the business in one place. All right. So if we go to the next slide, Jennifer, please.
Sure thing.
So it says Mutual of Omaha. I'm trying to keep this, as an industry level, but I'm from Mutual of Omaha, so you're going to see a twist on things towards me, just being blunt. All right. So the basics of what we can do out in the group market. So life insurance, you've got basic and you've got voluntary. So a lot of times employers are going to offer a basic, whether that be, the low would be kind of a $10,000 plan. I would argue that the cost of that versus a $25,000 or $40,000 plan, there's not a huge difference to an employer. Yes, I'm spending their money at this time, but a $10,000 benefit is better than zero. But if anybody's had to bury a loved one, it doesn't go nearly as far as it used to. So having all of that there, if you can get an employer to offer that, now you can also offer, well, I mean, you could do it besides, but you could also offer a voluntary plan. So being, you're working with personal, people and helping them get insured, maybe you've already sold them a whole life plan or something like that. This would be different than that. We don't sell whole life. So we've got term life insurance here, but at that point they can get the voluntary, they can get it at a reduced rate compared to generally what is out in the open market for an individual. And then at that point, it's on this group chassis, it's being insured, the risk is being spread out. So a lot of times it is a less expensive benefit, and then it'll be there for the duration of their employment. All right. Disability. I know that's or I guess I don't know. I've heard that that's a much more difficult sell on the individual side. And I know a lot of people don't have it, at least that I know personally. I don't know from selling it. I know my sister sells that stuff. From an ER paid plan, I mean, you can set up the plans. It's usually a 66% plan. On the STD side, maybe you're starting at 500, going up to maybe 1,000, 1,500. If you have high earners, going up to $2,000 a week. And then on the long-term disability, this is a great benefit. Whenever I present this to, crowds and employees, I'm sitting there letting them know that, you could go out when you're 22 and be on disability for the next 50 years. So I would actually argue at times that disability insurance is as important, if not more important than medical. If you don't have money coming in, you can't really pay for medical. You can't pay for your jet skis, your truck, or whatever else is that you're, caring for. So being able to offer this on that group chassis can really be helpful to these employees who aren't going to go and get this out on their own. You can do it both voluntary or employer paid, and we can assist with all of those plans. The statutory disability, you know, we said approved states. There's so many states that are offering these plans out, but let's stick to New York for now. The statutory disability plan, the 50% to 170 is, as I just did, laughable. However, it's out there and almost everybody in New York is qualifying into it. One of the things we can help with is communication. We can help with meetings if you're doing enrollments and all that. The reason I bring up this DBL, if you will, is that a lot of employees think that, okay, well, I have New York DBL. I don't need short-term disability, or I don't need long-term disability. I see Joe's kind of smirking there. You know, they don't understand the plan. They don't get it. They don't understand that after 170, Uncle Sam takes, you know, their cut, it's 120 now. So one, we do offset for that, as do all the other carriers. So you put that $1,000 plan in, it's really an $830 plan. All right. But we need to educate people, to have them know that, you know, that 170 really isn't going to pay their bills. It's not even going to, you know, buy them a 4-pack of craft IPA, you know, per week if something happens. So the other group product, dental, it's funny, I think we actually have a personalized dental product, but I know nothing about those. So on a group chassis, again, we've got one of the top networks in upstate New York. I'm going to caveat that with nobody has a good network in upstate New York. But we've just added in, we've got the Dentamax Plus network. We just added in the Carrington. There's a little bit of problems with that out in Buffalo. We can go deeper into that at some point. But in general, in the Rochester area and everything else. Joe, where are you from? Where are you out of?
I'm in Rochester, Webster to be, you know, exact, but Rochester, upstate here.
Oh, good. I spend a lot of time up there. My kids are swimmers, so going up to that Webster Aquatic Center.
Nice, yeah.
Spend many a weekend up there. So, you know, in the Rochester area and everything else, Blue Cross Blue Shield has a network that they tout as the best. It's a little bit smoke and mirrors because the reimbursement levels aren't up to par if you go out of network or you go outside that kind of Rochester bubble. But picking up a dental plan, being able to share that with the employees is pretty spectacular. Vision, there's a lot of different vision companies out there. We partner with iMed, who has one of the top networks in upstate New York. So I'm actually really glad we picked them. It could have been VSP, Davis. I know I'm missing a couple others, iCare, I think. So again, vision shouldn't be, you know, if you're quoting that with us, that shouldn't be, you know, rates that make or break a deal. So if something happens there, let me know. But again, if you're going with dental, a lot of times you can go with vision, and that should be something where everybody joins on. I'm trying to look at the pictures of people on here. I mean, I've got contacts. Jennifer's got glasses on. I bet you half of you guys also have something. So that should be a no-brainer. For us in New York, you've also got accident CI that can be ER paid. It can be employee paid. We're not filed for hospital indemnity. There are other carriers that are. I don't know why New York hates us and won't actually push that through the system, but we're all on insurance and understand New York's a little funny. So those are nice little products, you know, especially these days with medical costs going up, with the benefits then being slashed or high deductible plans. These are nice little ancillary plans to add in to assist with the cost and have some reimbursement levels going on there. Excuse me. And then we also, and a lot of other carriers will do the FMLA and ADA administration. We call it Absence Pro. If you're working with any groups over 50 lives, I highly recommend that they pick up an FMLA product. The one rule, and some people say it doesn't bother them, but one of the stipulations in that is that if a company messes that up, the HR person can be held personally liable. And some people have told me I'm interpreting it a little bit off, but that would scare the crap out of me if I was in HR. So we can do that as well. We fully integrate with our products, the disabilities, the statutory, and then all of the different federal and New York leaves and all of that. So in my mind, that's kind of the top group chassis, you know, driven products here. Any questions about what kind of is available there out to the market.
I'm sorry, John. I think I missed the CI. Is that cancer indemnity?
I'm sorry. So accident and critical illness, but
Critical
essentially,
illness.
yeah, you're going to have a couple different places that call it different. Some people call it cancer. We call it critical illness. There's about, give or take, 10 pretty significant problems or ailments that fall into the list there, and a lot of them are cancer driven. So people think of it as the cancer plan.
Okay. And do you guys set up any cafeteria Section 125 plans for the employer?
So that's usually more done, to my knowledge, on the broker level. There is a question on our sold case paperwork that says, are these part of a Section 125 plan? So we can work through that. I'm not as familiar about the setup on those and how they run that way.
Okay.
Good questions. All right, so why don't we go to the next slide? The next few things that I kind of wanted to touch on is, it's funny, it says why Mutual of Omaha there. So, you know, I'm trying to be fair and try to present, you know, what the industry has, not just us, but different carriers are different. And one of the things that I take a look at is, you know, a lot of times if you're working with a client, you're working with, let's say, the medical, the dental, and some of these ancillary lines, life and disability. And what comes down to is people take a look at the life and disability, think it's the same as any other carrier. The rate is, you know, 2 pennies off on one or the other. It's $500 a year, $100 a year, whatever the size of the group is. And they simply recommend the lowest rate. The one question I would always ask people is, okay, well, if you've got the medical, dental, and now the life and disability, and there's $500 difference on the life and disability, what is that $500 worth in the total benefits spend? You know, because we're talking about here, you know, a few $1,000s for these products, you know, on smaller groups. It can go up obviously on the bigger groups, but you know, what is that for medical? And a lot of times, you know, we're looking at a percentage, or we're looking at $500. It seems like a lot, or $1,000 or 100, whatever the group is. But yet on medical, they just got a 7%, or I hear medical this year is really coming in pretty high. You know, maybe it's a 20 or 30% increase. And now we're talking about millions of dollars, but we're worried about a 10% difference between carriers here when, you know, the cost is nominal and it's not even a rounding error on the medical side. So I always try to ask, you know, the brokers and or the clients to step back and take a look at it in a totality to see what this really all means together. So, you know, when I say that, I'll go through a couple of things that I would say, you know, on disability and on dental that maybe have us stand out from the crowd a little bit. But so on here, you know, this is one of our internal slides, or, you know, our mutual, but you know, so we've been one of the fastest carriers over the past 10 years or so. This has from 2016 when we reached 1 billion. We're now up to 3 billion 10 years later. So relationship business, and I'll get into this later, but you know, every time you need something, obviously you can call your team at CAFL. They've all got my cell phone. You know, you guys can have my cell phone. If there's a problem, we need to solve it. The one guarantee I will give everybody is that there will always be questions or concerns. And if we let them fester, it's going to be a problem. And I'll also guarantee that my team has the solutions and we can find answers. The one thing that I always find amusing is like, oh, come here, you know, this care, we can do everything perfectly. And you can't, they can't, I can't. That's not reality. But I do have a fantastic team here. From a claims perspective, when a claim comes into our system, every single claim is handled by a claims manager. On short-term and long-term disability, when claims come in, it's handled within 4 business days, whether we have the employee, employer, and doctor statements all together. Even if we just have one, that 4-day clock starts. Most carriers are going to start their clock as to when they process a claim, when all 3 pieces come in. Now, the doctor piece can obviously be a major problem. Sometimes they don't even send it in. So now all of a sudden, you know, they haven't started their clock on how long a claim takes to process because they haven't received all 3 pieces of information. So I'm just bringing that up because there are different ways that different carriers will function. And we have a very hand-holding atmosphere here, making sure that everybody, both whether it is a broker, whether it is HR, whether it's an employee, can receive the information that they need to. Focus on small to mid-sized business. So we bring a lot of what the industry does for the big guys down to the small. One of my kind of mentors here years ago said something interesting that stuck with me, is that Mutual of Omaha is really good vanilla. And knowing that we all work in upstate New York has vanilla plans. You know, it's not like we're going downstate to New York City where we've got a $20,000 or $25,000 long-term disability plan. We're not seeing a lot of $1 million or $2 million life insurance plans. The plans that we see and demographics and everything else are pretty vanilla, and so we're pretty good at that type of market. Another piece, if you do a lot of 2 to 9 sized business, we have a person who works with me named Aisha. We've got an off-the-shelf 2 to 9 product, and from what I've heard, and I know you guys do a lot of that here at CAFL, a lot of times if there's a penny difference, 3 pennies difference, it's $10 a year or something. So a lot of times it is, what is the service? How easy is it to implement? And so we have all of these high, pieces that 1,000 plus, whether it be FMLA, whether it's a great implementation team, whether it's direct, personal contact, we bring that all down into even the 2 to 9 market. So we will change we'll look different and change from what the market's doing. All right, so just to go into a couple things, I'm mentioning that not all carriers are the same. A couple things to take a look at. Jennifer, if you want to hit that earnings test one. So I'm just putting a couple things out here to whet your appetite. More than happy to talk about any of this on a further and more detailed basis. But on disability plans, so I mentioned sometimes it's a couple pennies difference. What does that equal in totality for a cost? But on this, something called an earnings test. Now, a lot of times this isn't noticed. You see a disability plan and you just look at the basics, 60% to 6,000, or if it's a STD, 60% to 1,000 a week. What's missed is the earnings test. And what this says here, it's often expressed as an 80-80, 80-60, or 99-85. Essentially what this means is that you have to lose a portion of your income in order to qualify for disability. Okay, everybody understands that piece. The most common is that 80-60. All right, so the 80-60, what that means is that for the first 2 years of a disability, you have to miss at least 20% of your earnings. That's the 80% rule in order to qualify. After 2 years, you have to have a 40% loss of earnings in order to qualify for benefit. So that could be a little prohibitive to employees who are trying to get disability coverage. Our plans use a 99-85 plan. So during the first 2 years, you have to have a 1% loss of earnings. And then the 85 means after 2 years, you only have to have a 15% loss of earnings versus the industry standard of 60. So now it's a much easier process for employees to get onto the disability plan. So that's one piece of something that I just want to bring up are different in the contracts, because how they're actually paid out, if your client is saying, well, why should I pay more for one of these? Well, I guess the overall question I start some presentations is why? I ask why a lot, internally, externally, people get a little annoyed, but my question would be, why are you offering this, Mr. and Mrs. Business Owner? Okay, are you offering life insurance and disability just because you feel you need to stay, with Joe and Bob down the street? Or are you doing it because you care about the employees? You want to make sure that you and they have the best coverages. Okay, and if they do, then things like this, I think, are going to matter. And this is where you can differentiate yourself, whether you're actually trying to pull in business or whether you're trying to maintain business. And I will say that most people, I know I've presented to CAFL a few times on this, but most people out in the market, when I do a deep dive into contracts and disability contracts, they do not understand these. And so they skip over it. And Joe, you mentioned earlier, trying to round out your portfolio. Most of the people in your position at least that I've run into, are really good at medical. They're pretty good at dental. And then, you know, these life and disability plans, they're not. So stuff like this, you know, whet somebody's appetite and then say, hey, JP, I started talking about this and, you know, can you hop on a call with me and talk to a client? More than happy to do that as well. Why don't we pop to the next one? Again, anybody can hop in at any time. As much as I love hearing my own voice, I'm sure you guys don't love it forever. Okay, so this is kind of, I actually just described this, so I guess I didn't realize how much I was going to talk. So basically, what you're looking at here is that the earnings test, total residual, total disability and residual disability. Total disability is essentially if you are only earning 0 to 20% of your pre-disability earnings, that's regarded as totally disabled. So you can earn up to 20% and still be clinically called totally disabled. And then it just kind of shows that 21% to 80% is residually disabled or partially disabled. All right. And then on some contracts that has that 80 rule, if you can earn 81% or more, you're not disabled. And if you skip down to the bottom line, earning 99% or more on our contract, you are disabled. To put that into perspective on a short-term disability, so short-term disability is a weekly benefit. In order to qualify on the first plan up top, you would, if it's an 80% rule, because short-term disability doesn't have the 80-60, it's just the 80. The 80%, if you've got a 5-day work week, you know, 20% of that is 1 day. So once somebody is on claim, it's amazing how quickly they learn the nuances of a contract. So if I am going to be out because I've got an appointment on Friday, well, now I may have my appointment at 9 o'clock and say, gee, that was exhausting. I need to take the whole day. And the reason I'm saying that is because I need to miss 20% of my earnings. So I have to miss an entire day of work in order to qualify or maintain my status on a disability plan. On ours, needing to miss only 1%, that means you have to miss 23 minutes out of a 40-hour work week. So now, obviously, I'm going to earn more if I am at work full-time. Maybe now I make my appointment for 3:30. I miss an hour, hour and a half of work at the end of the day, but I also maintain my status as being disabled because I'm 1%. So now I'm earning more money. The employer gets me at work, the person that they've trained, and I don't have to call in a substitute teacher. I don't have to call in another nurse. I don't have to have the guy down the hall or girl down the hall pick up my workload that day, depending on what sort of industries we're talking about. So now everybody's winning. The company gets their employees that they've trained. I get more work. I maintain my ability to continue to stay on claim in case it takes a little bit of a turn for the worse. So everybody wins. And the employees will absolutely figure this out once they're trying to figure out how they get paid. All right. Why don't we jump to the next one? So another piece that I'm going to whet your appetites with here. So probably the second most important provision, the return to work formulas. So when I said why, why are you picking one carrier versus the other? The thing that I'm looking at here is, here you go, you guys are back. How do we actually pay out a claim? And a lot of times people don't get into these details when they're recommending plans. So what I'm looking at here is that there are 3 main ways that carriers are going to pay out claims. It is a proportionate loss, most common, but pays out the least. A 50% offset, 99% of the time pays more. Once it reaches a certain salary, I forget that the proportionate loss takes it over, but give or take, it's going to pay more. And then the third one is the mutually progressive partial, which is the way that we pay out, okay? So I won't get too deep into the weeds here, but if you want to go to the next slide, Jennifer. What I did is put up an example here. So on the, my right and left, so my left-hand side, the proportionate loss formula, basically what we're looking at is a formula over 6 years. Somebody's going out on partial disability and they're trying to work, not work, and everything else. In this formula, if you look down at the bottom, this employee over 6 years, and this is based on, an employee earning $60,000 a year, which is $5,000 per month, and it's a 60% benefit, and they're trying to be returning back to work. So they've got a $2,100 return to work income. All right, and I know I'm going through this quickly. I'm just trying to illustrate differences in contracts a little bit here. So if this were to happen over the 6 years rather, you'll see the number down the bottom there in proportionate loss, 302,942. So that is how much over a 6-year period that this individual is going to bring in under this contract. If you bump over to the side, the other side there, the 50% loss, you'll notice that it's 309, almost 310,000. So right now, we mentioned on the previous slide that the 50% loss formula is going to pay out more than a proportionate loss formula, okay? So $8,000, $9,000, $10,000 difference over 6 years, okay? I'd still take the 10 grand. Now, if we hop forward another page, please. On the mutually progressive partial, we're now looking at $360,000. Okay, so over that 6-year period, this person is essentially earning $50,000 to $60,000 more over the time period. So we said this is someone earning $60,000 a year. So basically, they're earning an extra year's worth of salary on disability if you're paying out this formula than if you're paying out on the other two formulas. So again, going back to that question where I was saying, why go with a different carrier, or why pay a couple dollars more in the beginning? It's because something like this, where one, it's easier to qualify for claim, to stay on claim, especially while you're trying to get back to work, which is what you're trying to have employees do. They're the ones who are trained. And then you also can earn a lot more. Now, this is someone earning $60,000. So now put that up to an owner, okay, or a VP or something at that level, who are maybe earning, and not the 60,000, maybe they're earning 100, maybe they're earning 150,000. Obviously, these numbers go up exponentially with that original salary amount. I know I just went through some really high kind of level stuff very quickly. Any questions on kind of that stuff there? No, I'm that good at my job. Okay. All right. So
John, you're the best.
I like to think so, but you know, I've got an ego, so what do I know? All right, so just a couple things to think about. So dental, I mentioned that nobody really has a good dental network in upstate New York. So I used to work in Boston. If you didn't have 99% of the dentists, then you couldn't play ball there. All right. But I also had Vermont in my territory when I was out there, and Vermont literally had, I think, 0% anybody. Vermont dentists just simply didn't join networks. So depending on where you are, there's a difference. So obviously network can be very helpful. In upstate New York, I mean, you could have a group out in Lyons where there's one dentist there. And if you've got Dr. Murphy out in Lyons, then you've got, you know, everybody you need. And if you don't, then you're out of luck. So depending on how far outside of Rochester you're going, or, you know, upstate New York in general, you could just have Dr. Murphy or Dr. Smith, and whether you've got them or not, generally speaking, we have the strongest network. And I bring up just kind of these remote locations because you could have clients in these places where it doesn't matter what your upstate New York network is, who's got there. So a disruption report to see where claims are actually being utilized right now. We can run that, especially if it has the tax identification numbers or the TINs included in the report. Then at that point, we take that report, we say, okay, well, you spent X% of your claims dollars on these dentists. They're in our network, not in our network, because sometimes a network may say, well, I've got 60% of them, but that's only 20% of the actual claims. All right, so let's figure out where they're actually spending their money and then do a comparison that way. So a couple other things, DHMO, that's not something we're really going to see up here in Rochester, but if you've got some downstate clients, New York City, Long Island has a bit of DHMO networks down there. They're a lot smaller than the PPO networks that we're all kind of more used to working with, but we can actually play in that now. I mentioned earlier, United Concordia, that's added to our Dentamax Plus. So again, we have one of the stronger networks in New York. Now, a couple other pieces. So orthodontic refresh. I mentioned earlier, I've got kids, 2 16-year-olds and a 14-year-old. My plan, I believe, is a $1,500 ortho benefit. I wish we had switched to mutual about 1.5 years ago, because now times 3 kids and braces, I would have gotten an additional $4,500 back after I filed with the first carrier going over here. So if you have a client that is now going through and they're looking at different areas, and you've got, I mean, you can look at the census and see who's got, you know, if you've got medical, you can probably see where the dependents are. But if not, you can sometimes tell just based on the employees whether they're going to have kids in those ages. But doing a total ortho refresh can be a massive, massive advantage. Max rollover benefits, we can take over from the prior carrier with no additional cost. So if they have been accumulating benefits dollar amounts with the prior carrier, we can take those amounts over. Excuse me. Mid-year takeover, we can give a full annual max refresh. TMJ and missing tooth coverage, those are standard for us in New York. 357 rate caps. So this is really nice on cases under 200 lives, all right, 200 enrolled lives. Basically what the 357 is saying is that we are going to essentially give you a rate cap of 7%. We're going out with renewals at 3.5 or 7%, debating on how the group is running. But we recognize that these small cases are not experience rated, and thus we're not going to be charging them, 20, 30% increases. If the case is going bad, the most it's going to get is a 7%. So sometimes if you see our rates and say, hey, you're right about where, Met was, or Sun Life, or Guardian, or whoever, Blue Cross we mentioned earlier, you now know you've got a rate cap of 7% going forward, and it's likely going to be less than that. Our implementation.
John, real quick, is that
Yes.
the cap annually or like over a period of time?
Yeah, so annually. So a lot of times, every once in a while, we'll do 2-year rate guarantees. That's normal on kind of our life, our disability. We can get those up to 3 sometimes. DBL will sometimes go to 2 years. Our dental, we don't really love going to 2 years because that can be pretty volatile, especially in the smaller group market. So the 357 is normally going to be an annual rate cap of 7%. If we give you a rate guarantee for year one at 2 years, you're still going to get that 7% or less starting after that rate cap is up.
Okay, thanks.
Yeah, of course. Excuse me. So implementation. That's actually a giant pet peeve of mine. If you don't implement a case properly and handle it with care, then that could turn into one of those cases. And anytime we have one of those cases, that's a problem. It's a problem for me and my team because it takes a lot of nonsense time to fix things that weren't set up properly. It's a problem for CAFL because they've got to deal with it and make sure my team's staying on it. It's a problem for Joe, you and your team, because you're getting a client who's pissed at you because it wasn't set up properly. So to me, going through that, I will offer to sit down with any client and go through the sold case paperwork line by line, page by page, to make sure everybody understands what they're doing, make sure everybody gets what they're signing up for. And it can take a half an hour or so, which is fine because if we can spend a half an hour on the front end, so we don't have to spend numerous hours on the back end, it just makes it so the case basically gets implemented and can disappear. So I'm putting that on the table for anybody. It says 20 business days. At the end of our implementation, you're going to have your plan documents, you're going to be fully implemented, and then we're also going to do a welcome call with the client to make sure they understand how to work the system. The 20 business days is hardly ever, I was about to say hardly ever met, but that sounds bad. We hardly ever get to the full 20 days. Normally, we're implementing in 5 to 10 days. If there's really some confusion or some other stuff, maybe it trickles over. Maybe some of the 1-1 business trickles up towards that 20 days just because of the volume that everybody's going through at that time. But generally speaking, I would suggest that your clients are going to go through that much, much quicker. And then the nice thing, and you guys could tell me if I'm wrong, but I believe most carriers, once the case is implemented, you still then need to wait for the booklets to come out, and they can come out a few weeks or a few months later. Maybe that's not the case anymore, but everything is done and everything is in your hands at that point. If you are working in that 2 to 9 range, you can actually go out to your client. Sometimes getting census data from them is difficult. So you can go out, we can give you access to our system, type in the basic census stuff, say, okay, you got Joe, Bob, Sue, and Ann. All right, put it in there, pick from the couple plans that you could do. If they say, okay, great, it'll show all the rates there because it's off kind of the shelf. and then you click go, and within 15 minutes, your case is implemented and you have your plan documents. So in that 2 to 9, we're really pretty impressive. Average claim receipt to payment, 5 business days. So 95% auto adjudication, and we'd get a 4.8 to 5 out of 5 on the customer service satisfaction. So people like doing business with us. We've had a motto, easiest carrier to do business with for years. So we take a lot of pride in these pieces here. So CAFL, again, we've worked for years on cases. We don't have a lot of stuff, knock on wood, coming back with questions and issues, etc. So hopefully that means something. Why don't we go to the next page there? Where are we on time? 45. Okay. So this, just so you know, and I didn't change the number there. That's not my number there, and my name is not Cody Cox, but I stole that from one of his presentations. So John Prendergast there, you can get my number, everything else. My boss, Jeff, is down in New York City. Lindsay's my right-hand lady. Eileen is the renewal exec. The reason I have this up here is because of Jordan and Aaron. All right, Jordan and Aaron, I work with Jordan often, Aaron every once in a while. But if there is any questions from the broker side, from the HR side, Jordan is amazing. We can bring her in. Most carriers don't have a person like Jordan. She's a claims consultant. She can step in, she can analyze what's been going on, find out where the issue is or concern, educate the parties involved, and then help get that facilitated. For the employees, like I said, there's always a claims manager that they can already have reached out to, but sometimes people either don't understand or HR gets involved, and we've got Jordan there to mitigate that and make sure that everybody has the answers quickly and the details that they need. So I just wanted to share that we've got some middle ladies in there that really make my life a lot easier and your lives a lot easier. All right, let's go one more slide there. Enrollment services, not going to get too deep into that, but we do have minimums on some of the lines. Normally it's a minimum of 10 enrolled or 25%. STD is 15%. So it kind of changes per. We've gone a little bit down below that on some of the cases. Essentially, what I'm trying to say here is I'm more than willing to help you with any enrollments. Excuse me. If we can get the broker, HR, and my team on the same page, we should be able to boost enrollments to 40 to 60% participation. All right. But that takes working together, getting a meeting together, getting in front of people, educate them, make it easy to enroll, whether that's an online system or even sticking with old-fashioned paper. I've been using paper for years. The online systems are newer, but you've got to make the paper easy. Okay. So make it personalized. Make it so that they can see that $10,000 on voluntary life is only going to cost them pennies on the dollar. All right. So making it easy, educate people, and then more than happy to help you with this. If the cases are big enough, we have even more in-depth solutions to assist with. So just wanted to kind of put that little teaser out there. All right. And the last slide there, we can see it says thank you. So I talked a lot. I apologize for that. But does anybody have any questions about group benefits, what they are, why they're important, or how fabulous Mutual of Omaha is?
Mm-hmm. Yeah, just on the dental, if you're doing the refresh, it's still calendar year anniversaries on all the dental plans?
Yeah, so it kind of, that's a conversation we can have in any group. So sometimes a group is like, I'm so sick of these people, we need to get out of here. And it's 6/1, but they're supposed to be renewing on 1/1. So we can set it up so that we can take over mid-year and have everything refresh naturally on that 1/1 date, even though we refresh stuff on 6/1. So we can talk about, are we doing an off-cycle enrollment? And then do we need a different renewal date, or are we setting up the plan as a 6/1, but all the numbers refresh normally on a 1/1? So there's a few different opportunities and ways to handle it. We'll just need to click the right boxes to make sure it goes as you want. Cool. And if you think about any of this, I mean, you've got all their numbers. Jennifer, if you wouldn't mind sharing just my contact information with
Sure.
Joe after, make sure he's got it in case. But I'm always open for questions. I'm always open for a beer. So whatever comes first, just let me know and could figure things out.
Another trip to Ferrari.
I mean, I'm open to it. Why not?
Joe, are you a Ferrari guy? Ferrari pizza?
Yeah, I ate there a couple times. It was really good, but then they closed it down here in Webster.
Oh,
That's
which
the-
one did we go to, guys? It's
I have no idea.
no, the
We go to the
Sandy's
East
right.
Rochester one.
Oh yeah.
Yeah. Yeah, I think the one in Webster had a fire or something.
Oh, really? Yeah,
They
I didn't know
closed it
that. Yeah,
down.
well, I drove
Yeah.
by it. I'm like, it's gone. Oh.
I know.
Yeah, there's some nice. Where's like I've eaten at that Wegmans out in Webster a bunch, but then I think if you go past that, is that downtown? I don't know if it's downtown Webster or town next door, but it's a real cute downtown and some really nice restaurants over there.
Yeah, we've got a
Yeah.
couple here in Webster, but you may be thinking about Fairport. I mean, Fairport's really come alive over the last, I don't know, last year.
Yeah,
Yeah.
and actually knowing beers, I think it was pretty close to Webster 'cause we went there last time. The Fifth Frame has a new location.
Yeah, it's
Uh,
down by the river.
yeah,
And I was just there on Friday. It's really good. They do a nice job.
yeah, I've always been impressed with their beers, and now with all that extra food, it was easier for me to get to the downtown location and pick stuff up all the time. But
Yeah.
that location was fun to go to.
Awesome.
Cool.
Well, thanks so much, John.
Yeah, it's a pleasure meeting you, everybody, and seeing you, everybody. So again, let me know if there are questions. Let me know if there's clients we want to discuss, and I'll see. More than happy to give you details. I can do contract comparisons on cases if we're trying to say, you're here. What are you going to get by going here? Or if it's a marketing, or even if you got Unum and Guardian, and one guy's telling you this and the other girl's telling you that. More than happy to help figure out, why they're telling you those pieces. I'm kind of a nerd on contracts, so more than happy to help wherever I can.
Sounds good. Thanks.
Okay, thanks. Thanks everybody for joining too.
Thanks,
Thank you.
guys.
Take
Have a great day, everybody.
Bye, guys.
Bye-bye.
Thanks. Bye-bye.